Hello guys and welcome back to my YouTube channel. I know I've been inactive for a long time and that is the primary reason for that is because there was a sudden transition in the market for due to which my trap trading concept actually did not form any of my setups majorly. So this week when I did my back testing I found a small a change to my trading setup that could have actually a small modification you can say that yielded better results than my usual concepts that I followed. Okay, so this modifications is what I'm going to share with you, and stay tuned because in the end, tomorrow I will drop the market outlook video. So with this, without wasting any more time, let's get straight into the video. Okay, so these are the back testing or the that what I did in the market, and this I realized that my setups had formed a lot of times this week, only because but with a small modification. I should have modified my setup way back, and now I regret that. Not doing due homework and sitting straight in the market. So this is all the trades that formed this week for me. Okay, one went in loss, one gave small profit, and the others gave a fairly high amount of profit. But now the modification is going to be a bit huge. What is it? We are going to increase our stop loss limit. I know that is pretty heart wrenching as it is for me, but trust me, guys, that will give better results. Okay, so yeah, so let's get to it. So the first setup, our very own halt before reversal. So the market was trending up, right? There was no pullback, agreed. So it was not fair to enter here. It was not fair to enter here. But you know what the changes? When the market rallies, it rallies crazy. So here what happened was it broke an obvious level here and then broke down and then again started halting, right? So a halt below breakdown is a simple trap for us, right? So here what I've observed is when the halt range forms, right guys, when the halt range forms, we usually take the trade on this crossing and keep the last body as the stop loss, right? So if it were me, I would have kept the stop loss here, right? In usual cases, the same setup, just because there was no good pullback, I did not enter here. Okay, I usually wait for this liquidity, the previous retracements liquidity, to be grabbed and then go up, but that unfortunately didn't happen, so I didn't enter here. But you know what the observation here is? The observation here that I made was it was a double trap. What did I say in the start? It was a first halt and then a second halt. So there was no wrong in entering here because the sellers were already trapped and there was enough stop losses above this zone, right? So that was one. So the first takeaway, in an uptrending market rallies crazy. So any good pullback where you see sellers obviously being trapped, that is your entry point, right? So coming to point number two, in this case you could make an entry, fine. Yeah, so coming over to point number two, um, give me a minute. Yeah, coming over to point number two, we see it goes up, higher high, and a change of character takes place. So I've marked the FVG, which is here, right? And when the FVG was tapped and a clear negative candle was formed, right? I marked the fib from here to here. It was at the ideal golden reversal zone, right? And guys, one more thing. When you draw the fib, what do we ideally do? We ideally trade a retracement up to 382 to 35 level, which is our zone, and then which goes up, right? Anything below zero point 0.5, I consider it not an healthy pullback or a reversal sign. What I've observed lately is it pulls back until 0 0.5, hits the 0 0.6 level and makes a wick from there. So if we see, that is exactly what happened here. Okay, let me change the fib zone from here to here. Okay, yeah, on doing this, see, there is a wick that formed from the 0.5 to 0.6 right here, right? and then a inverted hammer formed. So that, and it is also a retest trap. If we see, this was the obvious level that broke out, right? Okay, this was the obvious level that broke out, and it was basically retesting it. So any pullback on a retest is an invite setup, and we will short and go against the trade in that. Okay, so this is another observation that it comes to point 6. So for convenience, let me just write it down. First, in a crazy uptrend, in a crazy trend, identify obvious traps and trade even without a pullback, right? And the second point is, in um, for the trend to continue, market retraces until 0.6, forms a wick and closes within 0.38 to 0.5 range. Okay, these are the two observations as yet. Okay, yeah. Next, going on to the third observation. Now, this is the biggest, right? What happened was, in head, shoulder, head breakdown, retest, right? Is that an entry? Valid entry, right? So earlier, I used to enter here on the confirmation of this bullish candle, but on a recent, not even recent, on a losing streak that ensued after that, I was really pessimistic on entering right here, and I wanted the level to cross for a confirmation. So what happened was, this level crossed, my original stop loss would be here, right? I wouldn't keep the stop loss beyond 55 pips. And what happened was, it hit my wick, straight hit my wick. It hit my wick straight and then moved all the way to my target. I was like, what on earth is happening here? Right? That was when I realized that the stop loss has not to be kept just below the body, but also below the entire candle, right? If I am entering here, it was fine. I would keep the stop loss here. I would not think twice. But since I am entering here, I was conservative in keeping such a big stop loss. Look at this, 75 pips. So I kept my stop loss here, 53 pips. And boom, SL hit and rally. So the next takeaway is, keep the stop loss beyond the retest range, right? Not just below the body, but below the entire wick, right? Next is the SL below or above the entire range and not just body, right? Now let's move on to the fourth observation that I made, right? This was our usual setup, right? This was the usual setup that I got. This one out here, simple, a range breakout, retest trap, boom, resistance to support trade, right? And this, the biggest observation of all, right? Guys, eyes on here, this is the biggest observation, and this might even change the trading style. Okay, what do we usually do? We get a breakdown, right? Breakdown, and this is also an M pattern, so it's an M breakdown. And what happens? It halts here. So on a halt, as I said earlier, we enter on the break of the range, and I keep the body slow as the SL, right? But what I've observed is, when this happens without the low being swept off liquidity, sometimes what happens is, there forms a candle like this and it closes like this. So somewhat like this, you can say this range was broken, it made a wick and closed, right? So this, if the liquidity is not grabbed below this low, then this resistance, this trend line resistance will be respected no matter what. I can show you a second instance where my trade had gone the other way. The backtested trade had gone the other way. Okay, so this will be an important zone to watch out for. If this liquidity grabs and a hammer forms right here, enter on the closing above this and do not wait for the level crossing, right? So in case if a hammer had formed here, I would have entered there no matter what. right? So a hammer like this, right, below the range, grabbed liquidity. Then I would enter above this, keeping this as the SL, right? So in that case, or if you had, let's say you had missed the hammer entering above the hammer at any point of time, then wait for the range crossing, okay? Then you can keep the body slow as the stop loss. If the previous low is triggered, if the previous low is liquidated, if it is not liquidated, keep the range low as the stop loss, like I've done in this case, right? I waited for the range breakout and kept the range low as stop loss. I will show you instance where this has gone the other way, right? SL hit and rally, that has happened just this week. Look at this. Picture perfect, same trade, right? So what do we see? We see an M pattern right here. M pattern broke, halted, up move. Trend line was respected and still it gave an up move. But here you can see triple top, breakdown, halt, trend line respected, reversed, right? So that is what you have to observe here no matter what, right? So if the previous low does not break, it will respect the trend line. It will respect the trend line. What matters is whether it is reversing or it goes up. So be ready to stop and reverse in case the previous low is not liquidated. So be ready to take an opposite side trade if this breakout fails, right? So in this case, it was a mini zone, so you could not consider this for a breakout failure. But in case this, so this one right here, in case if this had gone like this and hit the trend line and completely reversed, then I would have shorted out here considering the new plan. Okay, so let us write it down. If halt range is low or high is not liquidated, it will respect the trend line. So be ready for reversing your positions, right? 5. If the low or high is liquidated and a weak forms short or long below, oh my god, below or above the hammer, inverted hammer or hammer candle so formed, right? Did you get this? So these are the key 5 key takeaways that I have probably got in this. So here, the best application for the thing whatever we've learned, right? So if we can see downtrend, okay, slowing, breakout, right? It failed, right? And then it halted. This liquidity was there. Still it failed because the trend was bearish. Okay, this liquidity was there. This was what I was talking about, the liquidity. So you enter here with this stop loss. It gave 1:1, but it still respected the trend line. So there are exceptions to rule. So you are ready to short it right now, right? So yeah, that is how trading works. You adjust your systems according to the market conditions and work with it. So guys, this is it for the video today. If you want to join my Telegram for my trades, you can do it via the link below. For the access terminal that I trade on, the link is again in the description. And stay tuned for tomorrow's video, which will have the market outlook for the week. That's it for that video, guys. All the very best.